You just got paid $4,200 from a client. Feels incredible. Your bank account balance jumps, and for a second, everything feels okay. So you pay off a credit card. You treat yourself to a nice dinner. Maybe you finally book that trip you've been putting off for a year. 3 weeks later, you open your banking app and your stomach drops. There's $340 left. A client who was supposed to pay 2 weeks ago still hasn't sent the invoice payment. And somewhere in the back of your mind, a quiet, dreadful thought surfaces. Didn't I owe quarterly taxes soon? If this sequence of events feels a little too familiar, I want you to know something right now. This isn't bad luck. It's not because you're bad with money. It's not because you don't earn enough. This exact cycle happens to almost every single freelancer at least once in their career, and for roughly 90% of freelancers, according to patterns seen across small business finance communities and countless client stories I've heard, it repeats itself over and over again year after year until one specific thing changes. And that one thing is what this entire video is about. Before we go any further, I want to be really clear about who this video is for. If you're a freelancer, a contractor, a solopreneur, or you run a small service-based business, if the way you get paid is by sending invoices to clients instead of receiving a predictable paycheck from an employer, then everything I'm about to walk you through was built specifically for you. This is not a video for someone with a stable 9 to 5 salary who gets deposited the exact same amount every 2 weeks like clockwork. If that's you, honestly, a lot of standard personal finance advice already works fine for your situation. But if you're the person whose income might be $6,500 one month and $650 the next, if you've ever had a great month followed immediately by a terrifying one, this is built for exactly your kind of chaos. Here's what I want you to walk away with by the end of this video. A complete, practical system that takes your unpredictable, anxiety-inducing freelance income and turns it into something that feels every bit as stable, calm, and dependable as a salaried paycheck without you having to give up your freedom and go get a job. And I want to be really clear about something because this is where most finance content gets it wrong for people like us. This isn't a video about hustling harder or earning more money. Earning more won't fix this problem. I promise you that, because I've seen 6-figure freelancers who are just as financially anxious as freelancers making a third of that. This is about something deeper. Finally feeling in control of the money you're already making. Real freedom as a freelancer was never just about being your own boss. It's about not feeling your stomach drop every time a client pays late or a slow month rolls around. That feeling, that calm, grounded control, that's the actual goal here. Let's talk honestly about why this keeps happening, because understanding the root cause is what makes the fix actually stick. Here's the brutal truth about freelance income. It does not arrive on any kind of schedule. It shows up in lumps, in surprises, in delays. But your bills? Your bills do not care one bit about any of that. Your rent or mortgage doesn't care that your biggest client decided to pay their invoice 60 days late instead of the 30 days you agreed on. Your car payment doesn't care that summer was unexpectedly slow for your industry. And the IRS or your local tax authority absolutely does not care that you meant to set some money aside but never quite got around to it. And yet, here's the trap almost every single freelancer falls into, myself included at one point. We manage our business money exactly the way we'd manage a salaried paycheck. Money comes in, we spend what's sitting in the account, and we deal with taxes and slow months later, whenever later happens to arrive. Think about what actually happens when a big invoice gets paid. Your brain treats it like a win, like a bonus, like extra money you get to enjoy. But that $6,000 payment isn't a bonus. It's not even really your money yet. A chunk of it belongs to future you for taxes. A chunk of it needs to cover the months when work is slower. And only what's left after that is actually yours to spend or save personally. But almost nobody thinks about incoming payments that way, because nobody ever taught us to. This single misunderstanding, treating gross business revenue as personal spending money, is the actual root cause behind almost every freelancer money crisis you've ever heard about or experienced yourself. And this is exactly why so many freelancers who are objectively doing well, people earning $80,000, $120,000, even $200,000 a year, still feel completely broke. They still get blindsided every April by a tax bill they weren't prepared for. They still lie awake in December wondering if January's rent is actually covered, even though they had a great year on paper. It's not an income problem. It has never been an income problem. It's a systems problem. Freelancers aren't taught to run their income like a business. They're taught to treat it like an unpredictable paycheck and just hope for the best. Today, we're replacing hope with a system. Let's get into exactly how. The very first thing you need to do is stop treating every single client payment as money you can spend. Instead, set up 3 separate bank accounts: an operating account, a taxes account, and a personal pay account, sometimes called an owner's pay account. Every single time a client payment lands in your business account, immediately split it using fixed percentages before you do anything else with it. Roughly 30% goes straight to taxes, 20% goes to operating expenses and business reinvestment, and the remaining 50% becomes your owner's paycheck. A fixed, consistent amount you transfer to your personal account on a set schedule, weekly or bi-weekly, regardless of how much actually came in that particular month. This one habit breaks the emotional, almost automatic link in your brain between "I just got paid" and "I get to spend this." Instead, your business becomes its own separate entity, one that pays you a stable, predictable wage even while the client payments feeding it are wildly inconsistent. The business absorbs all of that unpredictability and chaos. You personally never have to feel it. You just get your paycheck like clockwork the same way you would from any job. Let's say you invoice $7,000 in March, but only $2,000 comes in during April, a pretty typical freelance swing. Under this system, $2,100 from March and $600 from April go straight into your taxes account, completely untouched, the moment each payment lands. The remaining amounts build up a cushion inside your operating account. And from that cushion, you continue paying yourself the exact same $2,500 owner's paycheck every 2 weeks, in both March and in April. You never feel that dramatic $5,000 income swing hit your personal life. Your business absorbs it. You don't. Next, open a separate, boring, slightly annoying to access savings account and label it something blunt, like taxes do not touch. Every single time you get paid by a client, 25 to 30% of that payment gets transferred into this account the very same day, before you check your total balance, before you plan any purchases, before you do anything else with the money at all. Quarterly estimated taxes are, without question, one of the single biggest sources of freelancer financial panic. And the reason is almost always the same. Most freelancers treat taxes as a distant future problem instead of what they actually are, which is a current, ongoing expense tied to every single payment you receive. The moment you flip that mental model, the moment tax money gets set aside the instant you're paid, rather than estimated and scrambled for months later, the entire tax season stops being a surprise. It just becomes a transfer you already made a long time ago. Picture a freelance graphic designer earning around $65,000 a year, who commits to setting aside 28% of every single payment the day it arrives. When her April tax bill comes in at $9,800, the money is simply already sitting there, waiting. No scrambling. No credit card debt. No selling equipment or dipping into savings meant for something else. Just a 5-minute transfer to pay what she owes, calmly on time. Now build what I call a 3-month income smoothing buffer inside your operating account. This is separate and distinct from a personal emergency fund. Its entire job is to keep your owner's paycheck completely consistent through the inevitable slow months every freelancer experiences. Fund this buffer first whenever a month comes in above your average income, before that extra money gets touched for anything else at all. Freelance income isn't just irregular, it's genuinely lumpy. A single large invoice can land entirely in 1 month, and then absolutely nothing significant lands the next. Without a buffer sitting there to smooth that out, every single slow month feels like an emergency, triggering stress, panic, and often bad financial decisions made under pressure. But with a properly funded buffer in place, a slow month simply becomes a slow month. Nothing more. Your paycheck to yourself stays exactly the same either way. Take a freelance copywriter earning an average of $5,500 a month. Over 6 unusually good months, she consistently funnels the extra income above her average straight into her buffer account instead of spending it. When an unexpectedly slow winter arrives and she only manages to bill $1,800 in January, she still pays herself her usual $2,750 twice monthly owner's paycheck without hesitation, simply pulling the difference from the buffer she built months earlier. No panique. No dipping into her tax reserve. No new credit card debt to cover the gap. Next, block out roughly 90 minutes once every quarter to sit down and review 3 specific numbers: your total revenue for the quarter, how much you've set aside for taxes compared to what you'll actually owe, and your current buffer balance. Based on the trends you see, not any single unusually good or unusually bad month, adjust your owner's paycheck amount up or down as needed. Most freelancers, understandably, never zoom out far enough to see the bigger picture. They live entirely invoice to invoice, payment to payment, always reacting instead of planning. A quarterly review completely changes that dynamic. It transforms your business from something that just happens to you into something you're actively steering, on purpose, with real data. It also lets you catch small, growing problems. A client who's chronically paying late, an expense that's quietly crept upward, well before they snowball into genuine emergencies. During his Q3 review, a freelance business consultant notices that his tax reserve has come up short 2 quarters in a row. Digging deeper, he realizes he moved into a higher tax bracket earlier in the year and never adjusted his savings percentage to match. Because he caught it during a calm, scheduled review rather than in a panic come April, he simply bumps his tax set-aside from 25% up to 30%, avoiding what would have otherwise become a stressful $4,000 shortfall. Finally, this last step is about physically and mentally separating the business's money from my personal money, completely and without exception. Never, under any circumstances, use your business debit card for personal purchases. Not just this once. Not for something small. Pay yourself exclusively through your scheduled owner's paycheck transfer. And never make ad hoc withdrawals from business funds for personal spending. This is genuinely the step that makes everything else in this framework actually stick long-term. As long as your personal money and your business money remain even a little bit blended in your mind, every single rule you've set up becomes negotiable in the moment. I'll just borrow from the tax account this once. I'll pay it back. Full, strict separation removes that temptation entirely. Financial discipline stops being an exhausting daily fight against your own willpower and instead becomes something almost automatic, because the lines are simply too clear to cross without noticing. A freelance photographer who used to regularly dip into incoming client payments to cover personal expenses made the switch to a strict, separate owner's paycheck system. Within just 2 quarters, she described the change in her own words as feeling like I finally have a real job, except I'm the boss of it. That shift in identity, from reactive spender to intentional business owner, changed everything about how she related to her own income. Let me tell you about Maria, a freelance web developer whose story really captures everything we've just covered. 2 years ago, Maria was, on paper, doing incredibly well. She was bringing in around $95,000 a year. But underneath that impressive number, she was constantly stressed. She had a $7,000 tax bill that she genuinely could not fully cover when it came due. She'd racked up credit card debt trying to survive an unexpectedly slow summer. And she told me she felt real anxiety every single time she opened her business bank account, even on the days when business was going well. Maria didn't need a bigger client or a higher rate. What she actually needed was a better system for handling the money she was already earning. She set up the 3-account split we just walked through, started setting aside taxes the very same day she received each payment, and spent about 8 months steadily building her income smoothing buffer. The following tax season, her bill actually came in higher than the year before, $8,200 instead of $7,000. But this time, she paid the entire thing in one click. No stress, no new debt, no panique. And she told me the wildest part of the whole transformation wasn't really about the money at all. It was that she'd finally stopped dreading her own bank account. That right there is the real transformation this system creates. Not just fewer financial problems on paper, but genuine, lasting peace of mind while running your own business, every single day. Let's bring everything we've covered together into one clear picture. 90% of freelancers go broke between paychecks, not because they don't earn enough money, and not because they're somehow bad with finances, but because they're trying to manage fundamentally unpredictable income using a predictable paycheck mindset that was never built for this kind of work. The fix was never a hustle, a side gig, or simply charging more. Although, sure, that can genuinely help too. The real fix is learning to treat your freelance work like the actual business it already is. Pay yourself a consistent owner's paycheck, no matter what came in that particular month. Set aside taxes the very moment you're paid so April never catches you off guard again. Build a smoothing buffer that quietly absorbs the lumpy, unpredictable months for you. Review your real numbers every single quarter so you're steering your business instead of just reacting to it. And completely separate your personal identity from your business identity when it comes to money, with no exceptions. This exact system is what separates freelancers who feel constantly, chronically broke from freelancers who feel genuinely stable and free, even at the exact same income level, earning the exact same amount of money. Running your business like an actual business instead of like an inconsistent side hustle is truly the whole game here. If everything in this system made sense to you, if you saw yourself somewhere in this video, go ahead and hit subscribe right now. I break down real, freelancer-specific and small business-specific money strategies exactly like this one every single week, and you genuinely don't want to miss what's coming next. But before you go anywhere, I want to hear from you directly. Drop a comment down below and tell me, what percentage of your income are you currently setting aside for taxes right now, today? I read every single comment on these videos, and I'm genuinely curious how many of us have been underestimating this without even realizing it. And if this video changed the way you're thinking about your business finances, you're going to want to be here for next week's video, where I'm breaking down exactly how much you should actually be charging as a freelancer to hit a real, stable owner's paycheck, including the pricing math that most freelancers get completely wrong from the very beginning. Subscribe now so you don't miss it. I'll see you in the next one.